Something strange is happening in the markets right now, and most traders don't even realize it. They think the problem is the chart. They think the problem is the news. They think the problem is their strategy. But the real problem is much deeper than that. The biggest shift in 2026 is not in price, it is not in indicators, and it is not in some secret system. The biggest shift is in trader behavior. And if you don't understand this shift, you're going to keep making the same mistakes, taking the same losses, and wondering why the market feels harder than ever.
Because the truth is, the market didn't just change, the traders changed. And once you see that, everything starts to make sense. The new generation of traders is not thinking the same way anymore. They are not entering trades the same way, they are not managing risk the same way, and they are definitely not reacting to the market the same way. This shift is subtle, but it explains almost everything that traders are struggling with right now.
It explains why fake breakouts feel more common, why good setups suddenly fail, why patience is becoming more valuable than speed, and why traders who used to perform well suddenly feel inconsistent. The hidden shift is not visible on the chart, but it is reflected in every move the market makes, and if you don't adapt to it, you will always feel one step behind. Let's be honest for a second. Most people get into trading because they want freedom. They want to make money from anywhere. They want control over their time, and they want a way out of the traditional system, and there is nothing wrong with that. But what most traders don't realize in the beginning is that trading is not just about learning charts, it is about learning yourself. You can understand candlesticks and still lose money. You can know patterns and still fail. You can watch hours of content and still feel confused when you are in a live trade, because the market is not just testing your knowledge, it is testing your behavior. And in 2026, that test has become even more intense. There is more information than ever before. There are more strategies, more indicators, more opinions, more tools, and more noise. But instead of making trading easier, this overload is making decision-making harder. Traders are not lacking knowledge anymore. They are lacking clarity, and that is exactly why behavior is becoming the real edge.
The hidden shift in 2026 is that traders are becoming more selective. They are no longer jumping into every move they see. They are no longer reacting to every green or red candle. They are slowing down, thinking more, and waiting for better conditions. And that single change is separating consistent traders from struggling ones. A few years ago, the mindset was very different. Traders were chasing movement. If price was running, they wanted in. If a breakout happened, they jumped instantly. If something looked like it was going up, they felt like they had to catch it before it was too late. That behavior was driven by excitement, not structure.
And excitement is one of the most expensive emotions in trading. It makes you enter too early, it makes you ignore risk, and it makes you believe that movement equals opportunity. But movement alone means nothing if there is no real intention behind it. Many traders thought they were being aggressive, but in reality, they were being reactive. And there is a huge difference between the two. Aggression can still be controlled, but reaction is usually emotional, and emotional trading is unpredictable. In older market conditions, this behavior sometimes worked. You could get away with chasing moves, you could catch momentum, and you could make money even without a solid plan. But in 2026, the market is no longer forgiving that behavior. Now it exposes it. The strongest traders today are not asking how fast they can get into a trade. They are asking whether they should be in the trade at all. And that question alone changes everything, because once you stop trying to be everywhere, you start focusing on what actually matters.
Instead of chasing every move, traders are waiting. They are waiting for confirmation. They are waiting for structure. And they are waiting for the market to show its hand before they commit. That is not hesitation. That is control, and control is what creates consistency. This shift is happening for a reason. Traders have been burned too many times by false signals, fake breakouts, and emotional decisions. Over time, they start realizing that being early is not always an advantage, and being patient is not a weakness. Another reason for this shift is the speed of modern markets. Everything moves faster now.
News spreads instantly, reactions happen instantly, and price can change direction in seconds. This creates a sense of urgency that pressures traders into acting quickly. But quick decisions are not always good decisions. When everything feels urgent, traders start treating every setup like it is the only opportunity they will ever get. And that mindset leads to mistakes. Real opportunities do not disappear in seconds, but bad decisions can cost you everything in seconds. So traders are adapting. They are learning to slow down in a fast environment. They are learning that not every move requires a reaction. And most importantly, they are learning that survival matters more than excitement.
This is one of the biggest mindset changes in 2026. Traders are no longer obsessed with big wins. They are focused on staying consistent. They understand that one bad decision can trigger a chain reaction. A big loss can lead to revenge trading. Revenge trading can lead to more losses, and that cycle can destroy an account very quickly. So instead of trying to win every trade, smart traders are trying to protect their capital and wait for the right opportunities. They are playing a longer game. You can see this behavior in how traders operate now. They take fewer trades, but those trades are more calculated. They are not entering randomly. They are waiting for alignment. They are looking for confirmation, not just movement.
They are also more focused on structure. Instead of saying something feels like it will go up, they define conditions. They say, if price does this, then the trade is valid. If it does not, then they stay out. That clarity removes a lot of emotional decision-making. At the same time, many older strategies are starting to feel less effective, and this frustrates traders. But the reason is simple. Those strategies were built for a different behavior environment. When traders were predictable, the market could exploit that predictability. Now, behavior is changing, and the market is adapting. What worked before does not always work now. That does not mean the strategy was bad. It means the environment has changed. This is why adaptation is so important. The market is not static, and neither should the trader be. If you keep using the same approach without adjusting, you will eventually fall behind.
The psychology of traders is also evolving. Today's trader is more aware, but also more pressured. Social media has created an environment where everyone is comparing results. People see wins, they see profits, and they feel like they are not doing enough. That pressure leads to overtrading. It leads to forcing setups. It leads to trying to prove something instead of following a plan. And that is dangerous. The best traders in 2026 are not trying to impress anyone. They are not trying to look busy or successful. They are focused on being consistent. They understand that trading is not a performance. It is a process. They protect their capital, they protect their mindset, and they avoid unnecessary risks. They are not reacting to every move. They are responding to the right moves.
There is a new rule in trading now. If you cannot stay calm, you cannot stay profitable, because the market will always expose your weaknesses. If you are impatient, it will make you chase. If you are greedy, it will make you hold too long. If you are fearful, it will make you hesitate. The market reflects your behavior back to you, and the traders who succeed are the ones who learn to manage themselves, not just the chart. They wait for better setups. They analyze their decisions, and they track their behavior. They ask themselves why they took a trade, not just what the result was. That level of awareness creates improvement. They also reduce impulsive decisions. They stop clicking based on emotion and start acting based on rules. They ask whether the trade fits their plan, whether the risk is acceptable, and whether the setup is truly worth taking.
One of the biggest mistakes traders still make is believing that more effort will automatically lead to better results. But effort without structure creates chaos. You can spend all day in front of charts and still lose money if your decisions are not controlled. Trading rewards quality, not quantity. And that is why the best traders often look the least active. They are not constantly trading. They are waiting for the right moment. The way to think about trading now is different. It is no longer about finding movement. It is about filtering movement. The market will always move, but not every move is worth trading. The job of a trader is not to catch everything. It is to identify what matters and ignore the rest. That ability to filter is what creates an edge.
When you improve your behavior, your results start to change. You take fewer bad trades, you manage risk better, and you stop reacting emotionally. Trading becomes more structured and less stressful. You start to understand your mistakes, and you start to recognize patterns in your behavior. That awareness leads to better decisions over time. Success in trading is not about one big breakthrough.
It is about consistent improvement. It is about making slightly better decisions every day and avoiding unnecessary mistakes. If you continue trading with old habits, the market will keep punishing you. But if you adapt, if you become more patient, more selective, and more disciplined, the market starts to feel different. It stops feeling random, and it starts to feel understandable. The hidden behavior shift in 2026 is not about strategy, it is about mindset. Traders are moving from impulse to patience, from noise to clarity, and from reaction to control. And the traders who understand this shift will have a massive advantage, because in the end, the market does not reward the fastest trader. It rewards the most disciplined one. It rewards the trader who can stay calm, who can wait, and who can think clearly under pressure. That is the real shift. And once you understand it, you will never trade the same way again.